I want to welcome in Patrick Mueller, though, our next guest, talk more broadly about the markets today, some of the rotation we're seeing, some of the reaction we're seeing to these mega cap names, Mag 7 earnings. Patrick, great to see you. RFC and president, of course, at Bella Advisors. I'd love to get your thoughts on this Friday. We've got green and significant green across the board here as we're really seeing a heavy rotation.
Great to be with you, Marley. Yeah, we are seeing a lot of heavy rotation. I think people are really starting to get wary, and people are kind of trying to figure out where the balance is with big tech right now. So anytime you see a move like with Amazon, it's a race, or it's a spending race on AI. So you see them yesterday coming out and saying, hey, we're going to spend $200 billion on AI infrastructure. That's setting everybody off and wanting to make different moves. So I think long term, that's going to work out really well for Amazon long term, but Wall Street definitely didn't like that. And so people are starting to make moves and making people, really itchy right now of, how over leveraged things are on the tech side right now in the markets.
And you mentioned Amazon, so I do want to get your perspective on this because I covered the earnings yesterday live on Market on Close. And when that 200 billion number came across, I actually opened the report itself. Like, I didn't trust the wire when it came across to make sure it was correct. I thought potentially there was a typo there just because it wasn't predicted to so far exceed any of the other numbers that we saw. What's your take there? And also the reaction we're seeing, the market sort of generally spooked by how massive the number was.
It was just bigger than expected. So I think that might have set people off a little bit, where you've got all these huge companies, whether it be NVIDIA and Microsoft and Google, that are just pouring so much money into this AI race. And we're going to continue to see more of that, but there's going to be a time where they don't have a whole lot of money, and they're going to have to start outputting real numbers when it comes from all these different AI moves. So I think we're going to continue to see that race really, until probably around summertime and getting into fall. But at a certain point in time, they're going to have to see the earnings coming back from this. And long term, I think it's going to be just fine. But in the short term, we're going to see if we're overdue for a pullback. The markets have been moving sideways for quite some time right now. And I think we're going to see some type of catalyst here in the near future that's going to start driving things down.
All right. So you mentioned NVIDIA there, and I have a follow-up about them potentially being that catalyst that you think could potentially pull the market back here. Jensen Huang has said that NVIDIA basically, and I quote, is holding the planet together. Even Alex Coffey mentioning earlier today that it's contributing 30 points to the rise that we're seeing today. So clearly major control here in terms of its concentration. Does the kind of concentration that NVIDIA has right now change how investors should be thinking about AI risk, especially as you're flagging that we are ripe for a pullback and we are waiting on their earnings at the end of the month?
I think everybody should be paying very close attention to that, because we see a lot of folks that are coming through our office that are way overweighted in tech. So for example, if you're owning the S&P right now, Marley, you had 40% of the growth of the S&P that came from just 10 companies last year, which is crazy. You had 40% of companies in the S&P that finished negative last year. There is a huge disparity in the markets right now, and it's so overweighted in tech. I mean, that's basically what you're buying right now, and the S&P is you're basically buying a tech ETF right now. So I don't think people realize how much money they really have tied to AI and these different companies. So when we do see some type of turn or a headline, whether it be NVIDIA or another company, like you just saw the headlines yesterday from Amazon and how much that spooked the markets. So there's going to be something like that that happens in the future. And you just want to make sure, I mean, we have to have money tied to those things right now, because that's really where significant growth is coming from. But I think people should be very cautious. And at this stage, taking some chips off of the table to redeploy that cash at some point here in the near future.
And so, Patrick, with that said, that the 10% of the names make up roughly 40% of the index, but 40% of the other names in the S&P closed the year down. What does that tell us about what's actually happening beneath the surface?
There's so many different changes that are happening. You've got so many industries right now that are being disrupted, and you're seeing big layoffs that are happening with a lot of different companies around the country. So I think there's a lot of industries that are really starting to suffer. And it's not really being reported enough, because the headlines move to how great the markets are doing and how great tech is doing, and there's so many different companies that are out there that are just struggling and not doing well. And there's going to be a point in time where that tide starts changing and start being reflected in the market.
And you mentioned the layoffs. We got the Challenger report yesterday, hit their highest January since the global financial crisis. What is that signaling to you? And is it creating any investment opportunities? Is there anywhere where you're focusing, where you are seeing growth, or you're seeing a potential dip buying opportunity here?
Absolutely. So what you're seeing right now is you're seeing a lot of, especially with tech companies, you're seeing a lot of layoffs and things because things are starting to be automated more. And what's going to happen is you're going to have a shortage in skilled labor, so plumbers, electricians. I mean, those jobs, what people get paid are going to go through the roof in the coming up years. So we're starting to see this transition. So when it comes to what's happening and the workforce moving forward, we're starting to see a lot of jobs coming back in from overseas, all of this reshoring. So different companies that are out there that are going to be benefiting from that, those are the companies you want to be focusing on putting money into, because that's going to be such a big driver of what's happening with this current administration over the next few years. So I'd be paying very close attention to that and a lot of attention to energy companies, because we got to fuel all of this AI growth, and the energy that it's sucking out of the system is insane. So that's going to be a big push moving forward.
Yeah, it certainly will be. And we're also starting to see some reports of communities pushing back on the energy needs of those data centers. So a lot to follow there. But Patrick, always great to have you on this show. I hope you have a wonderful weekend. That's Patrick Mueller, RFC and president at Bella Advisors.